Welcome to another bar walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over bar area 3. This is section C4. This is a remembering and understanding topic. Identify general and proprietary long-term liabilities reported in the government-wide financial statements of state and local governments. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to SuperfastCPA.com and sign up for our free 1-hour webinar training. In that 1 hour, for free, we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing exams. And after that, you're probably going to want to learn more, so make sure you also check out buying the pro course or buying our supplemental study materials, or of course getting the total bundle, which includes both of those things, the pro course and the study materials, so that you can get access to everything. Now, one thing I want to say as we're diving into this video, this is going to have 5 questions, and normally there is a member version where we do an additional 5 questions. So in today's video, we're doing 5 questions, but in that version, we normally would do 10 questions, and currently you would get access to that by being a pro member, but we are going to change that eventually to where you'll get access to those videos by purchasing the supplemental study materials for whatever exam that you're studying for. So again, if you like this video, make sure to check out becoming a part of SuperfastCPA so that you can get access to the full versions of these videos instead of just the 5 questions that we're doing here. Now, full disclosure, this video, just like a lot of videos that I've done with BAR, is actually a fairly small topic. So we're only doing 5 questions for the YouTube version and 5 questions for the member version. But again, a lot of the time, especially when I was doing FAR and audit, the member versions were basically double the YouTube version. So make sure you check that out if you're liking these videos. With all that said, let's dive into the questions for this video. All right, here we are at question 1. And as we're diving into these questions, I just want to say that this is a pretty simple topic, pretty straightforward. You know, if you understand liabilities from normal accounting, this shouldn't be too difficult, but we're going to dive into it. Let's read the question. In the government-wide statement of net position, how are liabilities generally presented? Okay, so are they going to be reported only as either governmental fund liabilities or proprietary fund liabilities? Are they reported only if they are expected to be paid from current financial resources? Are liabilities separated only between general obligation liabilities and revenue-backed liabilities? Or are they separated between current liabilities and non-current liabilities, with non-current liabilities further separated between governmental activities and business-type activities? So if you have no idea how this is going to be presented for government-wide financial statements, that's okay. We are using these questions to learn about long-term liabilities or, non-current liabilities when it comes to the government-wide financial statements. So if you have an idea, then you probably already know the answer. If not, let's go ahead and take a look at the answer to start learning. All right, here we are. The answer is D. The liabilities are separated between current and non-current, and then the non-current liabilities are further separated between governmental and business-type activities. So let's dive into this. This is pretty simple once you know it. In the government-wide statement of net position, liabilities are separated based on timing. Amounts due within 1 year are presented separately from amounts due in more than 1 year. So, that's pretty much how normal accounting is, a normal balance sheet. This is obviously not a balance sheet per se. This is the statement of net position. But again, it's pretty much the same, current and non-current liabilities. For long-term liabilities, the government also separates obligations between governmental activities and business-type activities. Governmental activities include general government obligations, while business-type activities include enterprise-type obligations such as those related to utilities. And we'll dive a little bit more into distinguishing between governmental activities and enterprise-type activities. But essentially, we now know there's current and non-current liabilities for the government-wide statement of net position. And in the non-current liabilities, they are going to be distinguished between general or, governmental activities and business-type activities, or essentially enterprise-type activities. So we learned a little bit there. Let's go to the next question to learn some more. All right, here we are at question 2. And something that we didn't get to do in the first question, but we are going to be able to do here, I wanted to point out that a good strategy is reading the last sentence of the question first. This is a very good habit to be in, especially when it comes to being at the exam, because you have no idea what you're going to be seeing on the exam on test day. So reading the last sentence first very frequently will give you context or give you the actual question that you're supposed to be dealing with so that you know what you're supposed to be looking for. So again, it's not like 100% of the time that you'll find this useful, but it is a good habit to be in all the time because when it helps, it helps. So let's do this. what amount should be reported as governmental activities, non-current liabilities, in the government-wide statement of net position? Okay, let's go up to the top. A city reports the following liabilities at year end. They had general obligations bonds issued for a city hall renovation, and those are due over 15 years for $720,000. We have special assessment debt for sidewalk improvements to be repaid from general resources if assessments are insufficient, due over 10 years, $184,000. There's compensated absences for general government employees expected to be paid after 1 year of $58,000. There's revenue bonds issued by the city's water utility due over 12 years for $335,000, and salaries payable for general government employees due next month for $42,000. So out of all that, what is going to be non-current liabilities, but not only non-current liabilities, they are going to be governmental activities. So think through this. I think that just based off of knowing the names like governmental activities or general activities and business type activities, and we're looking at non-current liabilities, I think that just with those basic words, you can probably think your way through this. And if you don't want to try, that's fine. This is only the second question, but if you want to try, definitely pause the video, think through this, give it a try, and when you're ready, come back, we'll look at the answer together. All right, here we are. The answer is C, $1,000. So let's go through this just to kind of see how we got there. Governmental activities, non-current liabilities include long-term obligations related to the general government side of the primary government. So just the general government, they're the things that aren't necessarily business type activities, which we'll talk about in a second. This includes the general obligation bonds, and the keyword there is general, the special assessment debt that may be repaid from general resources, again, that word general, and the compensated absences expected to be paid after 1 year, and those compensated absences are for general governmental employees. So, again, to kind of the general stuff, that's what's going to be included in the governmental activities. The water utility revenue bonds relate to a business type activity, so they are not included in governmental activities. The salaries payable is due next month, so it is a current liability rather than a non-current liability. So we take that $720,000, we take the $184,000 and the $58,000, add them all up together, and that gives us $962,000 of non-current governmental activity liabilities. So again, not too difficult once you can kind of distinguish between general governmental activities and business type activities, and we're going to keep learning how to do that throughout this video. Let's go to the next question. All right, here we are at question 3. What amount should be reported as governmental activities, non-current liabilities in the government-wide statement of net position? Let's go up to the top. A county has the following long-term liabilities at year-end. They have general obligation bonds issued for a courthouse renovation for $680,000. They have a long-term note payable for police equipment to be repaid from general tax revenues for $142,000. They have revenue bonds issued by the county's water utility for $390,000. And they have accounts payable of the general fund due in 30 days for $51,000. So again, what amount is going to be the governmental activities, non-current liabilities? So very similar to the previous question, we're just trying to figure out the governmental activities, non-current liabilities. So based on what we learned in the previous question, you probably have an idea of how to do this one. Pause the video and do it, and then come back when you're ready. All right, here we are at the answer, B, $822,000. Let's go through this. All right, here we are. The answer is B, $822,000. So let's go through this, very similar to what we just learned in question 2. Governmental activities, non-current liabilities include long-term obligations that will be repaid from the government's general resources. This includes the general obligation bonds for the courthouse renovation and the long-term note payable for police equipment. Again, these are things that are being paid out of the general resources. The water utility revenue bonds relate to a business type activity, so they are not included in governmental activities. The accounts payable is due in 30 days, so that's obviously current instead of non-current. So we add up $680,000 plus $142,000 gives us $822,000. So that one wasn't too difficult, very similar to the previous one. Now let's go to the next question to learn a little bit more. All right, here we are at question 4. What amount should be reported as a governmental activities non-current liability for compensated absences in the government-wide statement of net position? Okay, so we're a little bit more specific in this one, compensated absences. Let's go up to the top. A city's general government employees have earned unused vacation leave that meets the recognition criteria for compensated absences. At year end, employees have earned 1,850 hours of unused vacation leave. The employees' average pay rate during most of the year was $30 per hour, but their average pay rate at the financial reporting date was $33 per hour. The city expects $16,100 of the compensated absences liability to be paid within 1 year. The remainder is expected to be paid after 1 year. So with all that information, again, what are we going to report as governmental activities non-current liability for compensated absences in the government-wide statement of net position? So we haven't really talked about this specifically yet, but it's not a super difficult calculation, so I think you should definitely give it a try. Pause the video, think through this, give it your best shot, and when you're ready, come back, we'll look at the answer together. All right, here we are. The answer is B, $44,950. So let's go through this. This is a specific piece of the non-current liabilities that you'll probably want to know how to calculate or understand. Compensated absences are measured using the employee's pay rate at the financial reporting date, or essentially the balance sheet date. We don't use the name balance sheet date because we're doing governmental accounting, but that's the idea. Financial reporting date, balance sheet date, essentially the same thing. Not the average rate during the year. So we're using the balance sheet date or the financial reporting date, not the average rate. Since these employees work in general governmental activities, the non-current portion is reported as a governmental activities non-current liability. The total compensated absences liability is calculated as the 1,850 hours multiplied by the $33 at the reporting date, again, not the average rate. So that's $61,050. Since $16,100 is expected to be paid within 1 year, that portion is current. The remaining $44,950 is reported as a non-current liability. So not too difficult once you understand what's going on there. The key thing there that we needed to understand was which rate to use. We don't use the average rate, we use the rate at the financial reporting date, or essentially the balance sheet date. So that's the key thing that you needed to know there, is what rate to use. And then once you knew that, it was easy. You just multiply that by the hours, and then you subtract the amount that they're expecting to pay within 1 year, because we're looking for the non-current portion. All right, with that, let's go to the next question. All right, here we are at question 5. What amount should be reported as business type activities, non-current liabilities in the government-wide statement of net position? So we've learned about the governmental side of things, and that's pretty much what we focused on so far. Now, what is the business type activities, non-current liabilities? Let's go up to the top. A city operates a water utility as an enterprise fund. At year end, the city reports the following liabilities. Revenue bonds issued by the water utility due over 20 years, $706,000. Lease liability for water utility equipment, non-current portion, $88,000. Compensated absences for water utility employees expected to be paid after 1 year, $26,000. General obligation bonds issued for a police station due over 15 years, $415,000. And accounts payable of the water utility due in 30 days, $39,000. So based on everything we've learned so far, you probably will be able to figure this out, even though it's asking a slightly different question. It's about business type activities this time. I still think you can figure it out. So pause the video, do the calculation, and when you're ready, come back. We'll look at the answer together. All right, here we are at the answer B, $820,000. Business type activities, non-current liabilities are long-term obligations related to enterprise type activities, such as a water utility. And just to make sure that you understand what that means, in the governmental accounting, if you haven't watched any of the other videos or haven't gotten very far in governmental accounting, there are parts of the government that are essentially businesses. Water, electric, the bus system, like anything where citizens are paying the government to be able to use it, that's usually a enterprise or a business type activity. The water utility revenue bonds, the non-current lease liability for water utility equipment, and the compensated absences expected to be paid after 1 year all relate to the business type activity. The general obligation bonds for the police station relate to governmental activities. Again, it's general obligation, and so it's not business type activities. The water utility accounts payable is due in 30 days, so obviously it's current instead of non-current. So we add that all up, $706,000, $88,000, and $26,000, and that gives us $820,000 of non-current liabilities for the business type activities in the government-wide statement of net position. So again, as you've seen throughout this video, not a crazy difficult topic, but before we do anything else, let's do one more part of the SuperfastCPA process called pillar topics. Now, as a reminder, the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the things that keep popping up. The same concepts or the same formulas or equations or whatever the case is, you've seen it like 2, 3, 4 times throughout the questions, so you know that it is obviously something key that you need to understand from the questions. So you pull that out as a pillar topic in your own words so that you are prepared when you go into exam day. So let's take a look at the pillar topics for this video. All right, here we are at the pillar topics. Again, the idea here is essentially the key things kind of a summary of the most important things we learned from the questions. So let's go through this. Government-wide financial statements use accrual accounting. So long-term liabilities are reported in the statement of net position. Liabilities are separated between amounts due within 1 year and amounts due in more than 1 year. Very similar, essentially the same as normal accounting, but this is where the differences start coming in. Non-current liabilities are split between governmental activities and business type activities. The key is identifying which part of the government the liability belongs to. General long-term liabilities include long-term debts and obligations that will be repaid from general government resources. Again, the key thing to always look for there is general. Examples include general obligation bonds, long-term notes, special assessment debt backed by general resources, and compensated absences for general government employees. Finally, business type activities include enterprise type operations such as water utilities, sewer systems, airports, or parking garages. Long-term liabilities connected to those activities, such as revenue bonds, lease liabilities, and compensated absences, are reported as business type activities, non-current liabilities. So again, pretty simple, pretty straightforward topic. That is the end of the YouTube version of this video. Remember that typically there is a full member version of these videos if you purchase SuperfastCPA. CPA. This is one of the cases, again, for BAR, this has kind of happened frequently because all the topics are kind of so small and specific. But essentially, this member version will also only be 5 questions, but typically it's double the amount of questions. So if you like these videos and you find them helpful, make sure to check out becoming a part of SuperfastCPA because you can get the full versions of these videos where we go over, an additional 5 or 6 or however many questions to be able to basically help it sink in. Now, if you liked this video, make sure to like it and leave a comment. Before you leave, also make sure you go check out our SuperfastCPA training webinar on SuperfastCPA.com. It is a free 1-hour webinar where we will teach you the key ingredients to passing the CPA exam, and then that is the best path to then becoming a pro course member or buying the study materials or getting the total bundle where you get everything. So make sure you check out the webinar. Thanks for watching, and I will see you in the next video.